Hi, so behind me is the Federal Reserve Bank of Boston, and there'll probably always be sirens. I want to talk about negative interest rates and why they're so scary. And it's going to take a little bit because first I have to back up, I don't know, 80 years, whatever it is, whenever the Federal Reserve System was started in the country. In the 1800s, you had many banks, and it was sort of like a free-for-all. And banks would start up. Some might even come up with their own currencies, their own banknotes, whatever. And many banks would fail. And if you were a successful bank anywhere in the country, your success was always, in a sense, just like a stereo system, a function of your weakest component or your weakest banks that would fail. So many of the big bankers were like, we need a system where we don't have so many of these runs on banks so we can make more money. So that's how sort of the Federal Reserve was started. It was an idea to create a centralized bank that sort of keep all these little banks in line. And if a little bank somehow really screwed up, then they just allow that little bank to fold and there'd be no run in the bank and they'd protect the banking system. And to this day, that's what the Federal Reserve does. It protects us from bank runs, essentially. On the other hand, obviously, it also allows it to make more money, which is why you will read many people ranting on and on about how the Fed is evil. And to a certain extent, they're right. I mean, if making money, I guess, is evil, I don't know. That's a whole other subject. And then one of the ways they got through in Congress is they said, okay, even though we're doing this to make it more profitable for us, and again, many people call them a cabal, more profitable for us to run the whole banking system in the country, we're also going to change interest rates so that the economy is going down. We'll do things so that people can get employment. So we're going to do things that one of our mandates will be to make sure that people have jobs, that the economy is growing well. And that's basically the core foundation of the Federal Reserve Bank of the United States. The Fed is a central bank and has two purposes. One is to make sure the banking system is running smoothly with all its member banks so that people trust the banking system so it can run more efficiently and more profitably. And two, that when the economy needs it, it can lower interest rates to spur investment, to spur business. Or it will raise interest rates if the economy is going too fast and there's a lot of inflation, which is bad, because then people who own things, right, the value of what you own is worth nothing because the person who owes you money with inflated money can pay down the debt and get it for not really what they should have. Again, another whole long conversation. Bottom line, again, is the Federal Reserve influences the economy in two ways. One, by lowering interest rates to spur the economy forward, and two, by raising them to slow it down. When they started the Federal Reserve, they never foresaw a day when you'd have basically zero to negative interest rates where you don't have a recession. Now, in the future, they may say, oh, there's a recession now, and so we have zero rates, so nothing's really changed. But of course, I bet you none of your friends say it's in a recession. When somebody like me says we're in a recession, to you, you're like, I don't see it, right? So no, we're not in a perceived recession at the moment. So why are interest rates at zero or negative? Now, the question here is if the Federal Reserve rate, if its tools are always lower interest rates towards zero or raise interest rates, and interest rates are already at zero, but we're not in a recession, right? We're not fighting off a recession or depression. What does that mean? The founders of the Federal Reserve have no idea. Again, they never foresaw that. And now nobody seems to be calling the Federal Reserve to account to say, what does this really mean? And nobody really knows, but there are a few people that have some opinions about it, like me. And it means that the economy is so sick that we can't make it grow. People are too old. Whatever the reason is that there's no growth in the economy, that's basically dead. It's still functioning. Yeah, look around. Everybody looks happy. It's a bright, sunny day. Businesses go on. Everything is fine. Everything looks fine. But it's like we have cancer. It's like we've gone to the doctor and they say, okay, the zero rates are, you have no, I should say cancer. Let's say no blood pressure. You have no blood pressure. And as long as you don't move, you'll be fine. But as soon as you try and move, you're going to die. And I think that's what's going on with the economy. Is that it's these zero interest rates mean it's like sort of like a slow default. The economy can't generate enough revenues, enough profits to pay off loans, right? That would mean that if they could, then you'd have higher interest rates because people take out loans, right, and pay back money to start that business to pay off the loans. Because there's no real revenue, that basically when you're shrinking the interest rate below zero, you're essentially wiping out part of the principal that the banks own. The problem is that how do banks make money now, right? If they're not paying out interest, if they're not making loans, if they're giving you part of your own money or keeping part of your own money, how can that work long term? That can't. I mean, you're basically subsidizing the banks, right? Zero interest rates. People don't really make that connection, right? You have zero rate. You're paying for the banks. That's why the banks are laying off tons of people. That's why we're going to lay off even tons more people in the future. So let me just get the Federal Reserve. Again, the purpose of that place is to in a normal functioning, well-functioning economy, you have interest rates at 5%. Good is 5%. That's in the middle. Too high is above 10%. Too low is at 0. We're at 0 in a supposedly good economy. If things go bad, you can't lower from 0. So what does it mean? But what does it even mean right now to be at 0 and not in a recession? I don't believe it means anything good. And I think some very bad things are going to happen. I've written about that elsewhere. I'm not going to go into that here. But I just want to explain to you, while I'm in front of because I came to the city, while I'm in front of the Fed, in the Fed, what are the problems? That whole building, again, when it was founded, has no plan to deal with zero or negative interest rates in a healthy economy. Suppose, again, we're in a healthy economy. And it has no idea, it has not said now how it's going to deal with it or what it means. And we're just sleepwalking into I don't know what, but I have a feeling, because this has never happened before, it's nothing good.